Good morning. Today is Wednesday, May 6th, and the market has opened up considerably higher. So what I've done is I've looked at the bigger charts, and we've opened up into some type of resistance here. So we opened up here. This is where we closed. We closed right here, about 2084, opened up almost 10 points higher. We've run up on this first 3-minute bar. And looking at the larger time frames, we are into resistance right now. So I would expect some type of movement back down. How large, I'm not sure. So let's just look back a little bit here. So, all right. I'm going to look to see some type of reaction to the downside. Of course, I would love to see that first 3-minute bar's low broken to the downside. If we were to break that low, then I would expect at least half of that gap to be filled, which would be about right there. So I got to watch this closely because there's a good chance we could run higher, but my feeling here is that we should get some type of reaction to the downside. So I'm going to be very quick and nimble on this because it is a short and we did open up stronger. So let's just see if we continue moving lower here. Okay, here we go. Here we go. You know, I'm actually going right to break even now because we've got some type of push to the downside. 2093 is where I'm going to have my buy stop. 2093 right there. And, you know, honestly, I'm going to take 3 off now. Look, we're pushing lower. Nice. We're doing exactly what I thought. Nice, nice, nice. Let's go ahead and take 3 off on this weakness. Place a market order to buy 3. Look at this. Look at this drop. I'm going to watch it closely. Look at it. We've just broken the first 3-minute bar of the day. Look at up 937. Nice, nice, nice. Nice. This is what I like to see. So again, is initial reaction. This is weakness. Let's do that.
Order filled.
Here we go. Just locked in $525. Let's take this off because now we've only got 2 left. Right? So look at it. Start off with a small position. We had 5. Now we've got 2. We've locked in $525 on that first push to the downside. We've got 2 left, so let's move this down in the matrix to 2. And let's go, we're going to go right to 2090 and 3 quarters. We're going to have a buy stop at 290 and 2090 and 3 quarters here. I'm having trouble with my mouse. 2090 and 3 quarters. There we go. So nice trade, okay? So what are we expecting here? Well, I've got this white horizontal line that represents the halfway between the gap, okay? So I'm going to pause this video, and I'll be back as the trade plays out. So again, we're locking in profits on the remaining 2. We took profits on this weakness to the downside. The market just hit that first objective where the white horizontal line is, right? This is the halfway mark from where it gapped. Remember, we opened, this is where we closed yesterday. We opened here and ran up big time, but looking at the bigger time frames, we ran into resistance, what I like to call retracement confluence. So essentially what we've done, now let me just discuss this a little bit more. All right, this is nice trade. So if I were to take off the remaining contracts here, we made $1,100. Not bad. So if we crunch this chart up a bit, well, it's too, okay. So basically what I took is I took from 2 days ago high down to this low, and then I measured another high to low, and that's what we call retracement confluence. When you've got more than one retracement level sitting at the same spot, acts as resistance when looking for resistance, and vice versa to the downside. So what I'm going to do here is I'm going to start trailing my stop to above the prior bar's high, especially when the market takes out the prior day's or bar's low. So we just took out this low here. So what I'm going to do is I'm going to try to get as much as I can with this last position here to the 89 and 3 quarters. We're going to go to 89 and 3 quarters. We're going to move it down. Watch what I do. 89 and 3 quarters is right there. That moves it right down to just above the prior 3-minute bar high. Now let's just see if we're able to fill that gap. Right, this is the close of yesterday. was 2,084. Let's go to 84 and a quarter. Right there. So this is my profit target. We'll go 84 and a quarter, and I got my sell stop too. So let's go 84 and a quarter to take me out of the rest. And let's go 84 and a half. There we go. There we go. So we've got two orders working. We've got a buy stop that acts as a trailing stop, and then we've got a limit order below the market acting. Here we go. Look at that. Nice trade. Nice trade. Let's take out the remaining order, and that's it. Look at this. It is 9:39, and we put this trade on roughly 2 minutes into the open, and we were expecting the market to fill that gap to the downside. Again, this was based on the gap. I love gaps because you can play gaps. You get a gap almost every single day in the market, and if you know what you're doing and you understand the context of the market, you can make trades like this. Okay, so again, let me just point out what was done here. Again, gapped higher. We sold it right in here, near the high of the day, right? Again, waiting for that first 3-minute bar to close. Once I got that close, my stop was just above the high of that first 3-minute bar. So my R, which stands for risk, my risk was right here. That was my risk. So I made roughly 2 to 3 times what I was risking on that first, when I took off the first 3 quarters. And then look at this. This is where I bought it. I mean, that's a good trade, folks. And that can be done when you get the appropriate setup. Hope that helps, and I will be back with you later today if I get, or next trade. Okay, bye for now.